In yet another sure sign of the deepening real estate crisis in China, property giant Evergrande has filed for bankruptcy in the US. The move will allow the heavily indebted company to protect its assets in the US. The company has sought protection under Chapter 15 of the US Bankruptcy Code, which shields non-US companies that are undergoing restructurings from creditors that hope to sue them or tie up assets in the United States. Evergrande defaulted on its huge debts in 2021, which sent shockwaves through global financial markets. It basically ran out of cash and failed to pay its contractors and suppliers. It is the world's most indebted property developers with more than $300 billion in liabilities. The company's offshore debt restructuring involves a total of $31.7 billion, which include bonds, collaterals, and repurchase obligations. Negotiations with offshore creditors have been dragging on for more than 18 months, without any solution in sight. While Evergrande's default 2 years ago set off initial concerns about China's property sector, signs of a second wave of distress are emerging. Recent economic data reflects deepening anxiety with some of the biggest companies in China's real estate market struggling to find the money to complete developments. China's largest surviving property developer, Country Garden Holdings, defaulted on its debt payments last week. The company has 3,121 projects across the country. Zongrong International, a major Chinese trust firm with substantial real estate exposure, has also missed some repayment obligations, highlighting the outsized exposure of China's $3 trillion shadow banking sector to the real estate industry. For the buyer, who has made payments and has the burden of a home loan, there is little chance of getting possession of a house with Chinese developers, leaving a string of unfinished homes, shattering investor confidence in a blow to the world's second largest economy. Earlier this month, China said its economy had slipped into deflation, with consumer prices declining in July for the first time in more than 2 years. The country's imports and exports also fell sharply last month, with exports down nearly 15% versus a year ago. Morgan Stanley cut China's growth to 4.7% this year from the earlier 5%. JP Morgan has pegged the figure at 4.8%, while Barclays has trimmed it to 4.5%. Earlier this week, China's central bank unexpectedly cut key interest rates for the second time in 3 months, in a bid to boost the economy. China's housing sector contributes nearly 30% to the country's GDP, and a crisis in the sector has fanned risk of financial contagion, which could have a destabilizing impact on an economy already weakened by tepid domestic consumption, faltering factory activity, rising unemployment, and weak overseas demand. Bureau Report, Business Today Television.
If you like the video, do like, comment, share and subscribe.